Scott, as expected, the Fed left rates unchanged. What stood out for you?
Today, the Fed just really wanted to take a pause, step back from the market, leave the signal that rates are going to be on hold for the balance of this year and next year. So that's I think it's a very positive sign for the markets.
Now, we've seen strong labor market numbers. We've seen core inflation remains contained, but manufacturing still seems to be a bit of a sore spot in the U.S. How does the Fed reconcile this imbalance?
Well, I think they've done the right thing. They've pivoted this year. They supported the market, gave us a soft landing. We're going to see a reduction in the uncertainties over the next little bit on the trade side, right? So there's a possibility of a trade deal. You're seeing early signs of global PMIs bottoming. The JP Morgan Global PMI Index is above 50 for the first time. So that global backdrop will be supportive for U.S. manufacturing over the course of the next year.
And we talked about trade, but what are some of the other risks to the Fed's outlook going forward? Or is it just trade?
I think there's, the overwhelming risk this year has been trade and the uncertainties with that. And so we're definitely seeing a step back of that, the temperature on that gauge. There's always concerns about a risk for a shock in the markets or from inflation, but I think broadly speaking, there's really no concern on the inflation front. It's been below target, and it's forecast to be steady over the next year or two.
Now, earlier this year, we seem to hear a lot of talk about recession, but no one seems to be talking about recession anymore. Is that still a risk going forward in 2020?
The risk is a lot lower. I mean, there's always a mathematical chance of a recession, but I think what you've seen is a bit of a victory lap from the Fed this year. They've given us a soft landing. The market stepped back. The curve is not inverted. And so I think it's a good sign going forward. So, it's a low probability event. Certainly growth is low, but with the tensions abating, a little bit of fiscal stimulus and central banks on hold, this is a really, this is a bit of a good news story as we see, a stabilization in global growth and some stability in the risk asset markets.
So we're sort of in a sweet spot right now.
Yes, definitely a sweet spot.
Scott, thank you very much for your time.
My pleasure. Thank you.